welcome you all for the course Managerial Economics. I am Dr. Dinesh, Faculty of Finance, School of Management, Shastra University. I am going to handle a session on macroeconomics. Let you understand what is economics. Economics is all about studying of resources. The studying of resources that starts with the individual elements, that starts with the individual household, start with the enterprises, start with the government to study the overall economy. For that, the different aspect the researchers are going to study about economics. So, basically what we are going to study the individual elements, we are going to study about the individual household that deals with the microeconomics. It is going to study about the individual elements. It is going to study about overall expenses, overall income of an individual. It is going to study about the expenses pattern of the individual, purchasing power of the individual. So, how the individuals are allocating the resources, what is their behavior in terms of allocation. In terms of economic efficiency for the individual elements are going to be studied in the microeconomics. While you take the macroeconomics is an aggregation, it is in total you are going to evaluate in total of demand, in total of supply, the aggregate supply. Likewise, the major elements we are going to study in the macroeconomics. So, what the basically going to study the resources in terms you take for example of the firm or business enterprises, the resources going to be studied in terms of their production capacity, in terms of their other factors like the employees available in the organization and the financing facilities of a particular organization. So, likewise there are different parameters in which we are going to study about the resources. So, in terms we are going to study about the government expenditure, the pattern of utilization of funds in the government, the allocation of funds for the various schemes. So, likewise in different aspect for a different time period we are using economics to measure the efficiency, to test the efficiency, and the utilization level we are going to evaluate by using the concept of economics. So, we will study about the economics. You need to understand economics study about the society and allocate the scarce resources against the unlimited desires. Let you take an example, whatever the resources that we have. So, say for example, you have 1 lakh rupee at your hand. So, what you are going to do out of the 1 lakh rupee? Whether you are going to buy a vehicle or whether you are going to make investment of 1 lakh. So, you have n number of needs. So, say for example, you are going to buy, you are interested to buy the laptop, you are interested to buy the vehicle, two wheeler, you are interested to buy, you are interested to buy a car. So, you have unlimited desires. So, those unlimited desires are not going to be met at the same time, we are going to meet out the desire which should be considered as a priority. So, allocating a resources is what we normally consider as a scarce resources. Rarely the resources are available. So, the available resources we are going to use effectively. So, the first concept, the first meaning of economic itself is focusing on the resources. So, how effectively an individual or an organization or a government is going to use the resources, the level of utilization of the resources, how those level of resources is going to satisfy with the desirable needs, unlimited needs of an individual, unlimited needs of the organization, unlimited needs of the government, how it is going to be fulfilled. So, this particular concept of economics that widely applied in a worldwide, widely useful for the determination in various price level, determination of market conditions, determination of price determination, the various aspects we are using a concept of economics. The economics is concerned with the well-being of all the people. It is not only going to consider about the particular people or a segment of people or a particular market, not like that. It is going to study about the overall conditions, what it is prevailing, what about the overall resources, overall constraints, the everything is going to be studied in the economics. It is the well-being of a people, it is including those who have a job or those who are not having a job. It is going to study the entire thing. So, say for the national income you are going to calculate by deploying a various methods. Say for example, you are going to calculate by using a income, what are the overall income generated by a people in the particular country, by overall people in the particular country. Consideration, what are the sources of income of those people are also taken into consideration for calculation of overall income. While you are calculating the per capita income, we are not going to remove the people, those who not having a income. We are also including those people who have a income or not to have a income. Together you are calculating the per capita income. So what normally economics is not going to make a kind of discrimination, whoever having a income, whoever not having a income, not like that. It is going to study the entire people, whoever having a job or not having a job are going to be studied by the economic. Those who without the income, or those who have a level of income, different level of income, either they have an income or not having an income, any source of income, or those who have a higher level of income, or those who have a lower level of income. It is like who have been employed with the MNCs, who have been employed or self-employed, or the people have been employed in an organization with a lower grade. They are receiving a salary of 50,000, who are receiving a salary of 4 lakh per month. Whatever it may be, that irrespective of that, economy is going to study the entire people in the society. They are going to study, they are going to concentrate on the standard of living of the people, purchasing power of the people. So likewise, as a whole, as an entire element is going to be studied in economics. It is clear that the economics is going to be studied a lot ground. It means the overall the comprehension is going to be studied in the economics. What the economics is going to be divided in major the economic classifications of economics, or the microeconomics as well as the macroeconomics. So what is microeconomics and macroeconomics? If the microeconomics you take, microeconomics is going to deals with the individual elements. It is going to deals with this. Where you take the macroeconomics is going to study about the aggregates. It is going to study about the overall aggregate. It is going to study about the overall income level. So say for example, if you are going to study the income of individual, or income generated by the particular firm, that comes under the macroeconomics. While you take a macroeconomics is going to study the aggregation of individuals. What about the source of income of those individuals? The collection or a total value of those income that comes under the category of macroeconomics. The futures of microeconomics. So let me understand at first what are the futures of microeconomics. So the microeconomics, the futures of microeconomics, study the individual units, analyze the allocation of resources, focus on a market behavior, analyze economic efficiency, price determination. There are the major futures of microeconomics. Let me study the first one, study the individual units. What is the individual unit? We are going to study about the expenses of an individual, expenses of a household. We are going to study about the income of the household, spending pattern of the household. We are going to study about the purchasing power of a household. If we are going to study about the individual elements in the society, individual element in the country, we are going to study that particular branch of study, we call it as microeconomics. Second one, analyzing the allocation of resources. What are the sources, or the resources are available in that the organization, in that the household. So how those resources are being effectively utilized? We are having an income, so how those income are to be allocated in the various expenses, how we are going to distribute it for savings, how much we are going to distribute it for the monthly expenses, meet out the necessities, what we are going to purchase. So likewise, basically the economics is going to allocation of resources, effective allocation of resources among the different alternatives. We have a different alternatives, we have a different categories of expenses we have. So in those expenses, those categories of the income going to be allocated with the different categories of expenses. So this we have analyzing the allocation of resources for an individual element, focusing on the market behavior. So, how an individual is going to make the behavior in the marketplace, how they are going to buy the product, how they are going to make or attempt to buy the product, the process of buying, or what we can take purchasing power of an individual in the market, what would be the kind of demand for buying the particular product, what would be the supply available in the market for the particular product. So, likewise we are going to study about the market behavior, how a people is going to behave in the market, and what are the factors in the market which can influence the people to make a purchase in the particular product or a service being offered in the market. Analyzing the economic efficiency, we are going to estimating the efficiency, we are going to analyzing the efficiency which can be possible in the microeconomics for the individual elements. We are going to study about their source of income, we are going to study about their application of funds, we are going to study about the prediction of a flow of funds in future. Likewise, we are going to study the economic efficiency, which is we are going to evaluate over the period of time for making effective managerial decisions in the organization. Price determination for the various products or various services used in an organization. It is like we are going to determine the price, it is we are going to determine on the basis of a cost, on the basis of prevailing market price. It is you take for example of determination of price on the basis of cost, what would be the cost which incurred for purchasing of raw material, cost incurred for processing of a material, cost incurring while deploying a manpower for the process, while we are going to preserve it, while we are going to transport the product, what would be the cost which involved, what would be the cost of a final goods. So, likewise arriving that we are adding the desirable profit margin, we can able to evaluate, we can able to determine the price for the product. Simply you take the example of market based price determination based on the market condition, based on the purchasing power of individual, based on the standard of living, based on the target segment, we are going to identify, we are going to establish a price for the particular product on the prevailing market condition. Determination of factors of pricing. Factor pricing, you need to understand the factor pricing, we are going for a method for the factors of production. Let you understand what is factors of production. The factors of production are land, labor, capital and overall organization. Let you take a price for the land. What would be the price for the land? What would be the rent I am going to pay? That I am going to evaluate, that I am going to analyze, I am going to evaluate the overall conditions, in what price I am going to pay, what rent I am going to pay for using the land, or if the land has been owned by you, what would be the assumed rent if I am going to take the land, or if I am going to take the land on lease or going for a rent option, what would be the rent I am going to pay, like a imputed rent I am calculating. For that the particular purpose I can be able to derive, I can be able to measure my overall profitability after adjusting these expenses. Like you take the pricing what I am going to pay for the labor in terms of salary or in terms of wages, for what, based on the different cadres, based on the level of skill, it is unskilled people or semi skilled people or skilled people. For a different category of people, different categories of employees, the different level of engagement of those employees with the organization, I am going to decide the wage, or I am going to decide the salary for the people. So, what would be the salary or a kind of wages I am going to fix for the people whoever work for my organization, that the pricing for a labor. The capital, what amount of capital I am using for this organization. So, say for example, what would be the capital I bring for starting up of this organization, the fixed capital for the organization. What would be the amount of capital I should have for running of this organization, like a working capital, what I need to bring for this organization. So, while you need to understand what would be the amount you need to bring for starting and running the organization. It is in term I am going to measure, in term I am going to evaluate the cost of fund, which means I am going to, how much I am going to pay in the form of interest. If it is a borrowed fund, what would be the interest rate prescribed by the bank or a financial institution, or else it is I got it from my friends or relatives, what would be the rent I am going to pay, or else it is your own fund, you are calculating the rate of return. you are calculating the cost of equity. Likewise, I am going to fix a price for the capital, what I am going to deploy in my organization. You are the resource, you are coordinating, you are collecting the resource, you are coordinating the resource to achieve the objectives of the organization. So, as a person, as an entrepreneur, or as an overall coordinator of the resources, what would be the remuneration for you? What would be the remuneration for the organization? It is in terms of profit. So, I am going to decide what would be the price I am going to pay for the factor. So, what we call it as a factor pricing. The partial equilibrium analysis, there is a two concept what we have normally in economics, general equilibrium and partial equilibrium. What is a general equilibrium? That the condition in which the market is going to react at the same point of time, the market demand is equal to the supply. But what the partial equilibrium, mainly it is applicable for the microeconomics. What is a partial equilibrium? Which means it is the kind of demand that tend to change with the different market, with the different market condition, with the different products, that the demand will change. The supply is also tend to change according to the demand what it is prevailing in the market. It is not a generalized concept, it is a specific concept which is applicable for individual elements. So, that we call it as partial equilibrium analysis. And economic welfare. So, the welfare measures are a contribution towards the growth of economy, the contribution towards the welfare of a people. So, that also comes under the category of microeconomics. Using a slicing method, dividing, micro level analysis, micro level evaluation, that you are going to do in the microeconomics. Say for example, you have a income. So, what would be the source of income? How you are going to meet out your expenses? In the expenses, what are the expenses? What you are going to buy? How you are going to buy? When you are going to buy? What amount you need to spend for optimum use of resources? Likewise, the kind of suggestions are to be provided in a slicing method, which we call it as a slicing method in microeconomics. With that, what the overall thing or a overall broad concept is going to be narrowed down in the slicing method. If I have a 10,000 rupee, out of 10,000 rupee, what I am going to spend, how I am going to spend the 1 rupee, or how I am going to save this 1 rupee for a future purpose. Likewise, a kind of things are going to be elaborated under the concept of slicing method that applicable, that also be considered as a benefits of microeconomics. And construction of model, there are various factors, various different variables are affecting the microeconomics. So, those variables are taken into consideration, those variables are measurable in terms, we are going to identify the behavior of those variables. So, in that the particular concept, we are going to identify, we are going to evaluate, we are going to analyze the various factors, various construct or various dimensions which can influence for the household, which can influence for the firm, we are going to study under the microeconomics. The meaning and definition of macroeconomics. Let you need to understand the concept of microeconomics well, and after it is required, you need to understand about the macroeconomics. The meaning of macroeconomics. The word of macro is the origin of Greek word. It means a large. Macroeconomics deals with the large focus, which deals with the aggregation. It is the macroeconomic studies are the economic problem from the point of view of entire economy. The total economy as a whole, the economy is taken into consideration while we are going to study about the macroeconomics. The macroeconomics is a study of the structure and the performance of a national economics and of the policies of that the government use to try to affect the economic performance, to evaluate the economic performance. There are different policies formulated by the government in terms they are going to measure the performance of the economy. So, the microeconomics only deals with the individual elements, where the macroeconomics deals with the structure and performance of the national economics, which means it is going to study about the overall production in a country. It is going to study about the overall income generated in a particular country. It is going to generate the overall money flow in the particular country. So, likewise, everything is going to be studied as an aggregate. We are not going to study the individual element, rather we are going to study about the overall aggregates, aggregate elements, aggregate variables. Together we call it as macroeconomics. Let you take a performance of country, we are going to measure in terms of its GDP, gross domestic product. The concept is not going to, we are not going to take one particular element while we are doing the calculation. We are going to take the aggregate calculation. While calculating the gross domestic product, it is the overall goods and services produced in a particular country over the period of time. It is in a particular territory or a geographical location of a particular country. What would be the overall goods and services has been produced. So, in this particular concept, how we are going to measure or how we are going to evaluate, in that the evaluation pattern we are analyzing, we are just taken the few things into consideration while calculating the gross domestic product. It is in terms we are going to measure the gross domestic product in terms of consumption expenditure. What would be the overall consumption expenditure in a particular country? So, say for example, how much a consumer is spending for their living in a particular country, for meeting out their standard of living. What would be the overall spending pattern of a consumer? Together we are calculating what would be the consumption expenditure of A, consumption expenditure of B, C. Likewise, we are going to collect the consumption expenditure of overall people or aggregate of people who were living in a particular country. We are going to take it into consideration of those consumption expenditure. Next one, we are taking aggregate, we call it as the government expenditure. What would be the expenses of a government in terms of distribution, in terms of the welfare measures given by the government, spending for various policies and promotional aspects. What would be the spending of a government, that together collecting all the information, together gathering the information that comes under the government expenditure. The third parameter, third important category that we are taking are investments. What would be the overall expenses for the individual towards the investments? It is in terms of how much they spend, how much they retained for the future purpose. The investment is what we call it as a future expenses. So, together we take the value of investments held in a particular country over the period of time or during the particular measurement period. What would be the income that have been realized for, during the particular period of time. And we will take the balance of payment, or we take the export minus import, how much the volume, the total volume of export happens in a particular country, and what would be the overall level of import in a particular country, what would be the difference. While we are generating, while we are involving the activity of exporting, you may receive the fund, you have a cash inflow, while you are importing is activity of cash outflow. So, what would be the net cash flow you have? So, together we are adding. So, together we are calculating the gross domestic product, we are calculating on the basis of government expenses, consumption expenditure, investments, and the balance of payment. Together we are calculating the measurement of gross domestic product. This is one particular example how we are calculating. Rather, you take national income, there are different aggregates, different measures we are using to calculate the overall income generated by the particular country. So, based on that, based on the different parameters, based on the flow of income for the particular country, they are also developing a different policies to meet out the needs of the people, to bring the economy into the uptrend. So, for that the government is also taking a number of measures, number of policies are also implemented in the country. For example, you take major policies, the majority of all the policies are derived from the policies or the instruments owned by the government. We call it as fiscal policy and monetary policy is going to evaluate, is going to be the instrumental for the development of other policies of government. It is going to be the formulation of credit policy, it is going to decide how much a bank should be kept in the form of cash reserve ratio, and what would be the marginal standing facility, repo rate, reverse repo rate, statutory liquidity ratio. There are a different aspect, there are a different instruments, there are a different indicators of economy is going to be decided by means of the birth of different policies in the country. It is a human resources policy, it is in terms of industrial policy, it is in terms of the economic policy of the government, it is in terms what are the liberalization that they have given, what are the area in which the government has introduced the globalization or inviting the capital from the foreign country. or when it is going for a nationalization concept, everything that together comes under the policies of the government. So, together it comes under this particular category. So, it is going to be study the overall economic policy of the government. Definition of macroeconomics. So, let you take the first definition of Professor Mark defines the economics, the study of economics in terms of whole system, especially with reference to the general level of output and income and to the interrelation among the sectors within the economy. So, let you take this particular definition. Need to understand the general level of output and income in a particular country. The general level of output, it means overall goods and services produced in a particular country, and what would be the income generated in a particular sector of economy. While we are dividing a sectors of economy, you take a Indian economy, what we are going to divide the economy into agricultural sector, industrial sector and services sector. So, what would be the overall output of industrial sector, overall output of agricultural sector, overall output of services sector, and what would be the level of income have been generated in agricultural sector, level of income have been generated in services sector, level of income have been generated in industrial sector. So, likewise the study is going to study the economy into a different sector. For aggregation, the concept of aggregation is used to determine the overall efficiency of the economy. Professor Bowling defines macroeconomics deals not with the individual quantities as such, but with the aggregates of quantities, not with the individual income, but with the national income, not with the individual prices, but with the price level, not with individual output, but with national output. This particular definition is elaborate one, which is going to be addressed the different constructs of macroeconomics. If you take the definition, in this definition, the basically what it is not going to be deals with the individual elements, it is going to be deal with the overall aggregates. So, what are those aggregates? What are those elements are taken into consideration while calculating the national income, or while calculating or analyzing the situation of economy in the macro level. In that the particular thing, first one, let you take the individual quantities are not taken into consideration, aggregates of quantities are taken into consideration. Say for example, if we are going to determine, we are not going to take the output generated by the particular firm, we are going to take the output generated by the overall firms in the particular country, overall industries in a particular country. So, what would be the output generated together comprising or aggregating the totaling the entire output generated by the different firms in the economy, together the aggregation we are calculating the overall output, rather we are not seeing about the individual output. The second one, we are going to deals with the national income, we are not going to deals with the individual income. We are not calculating the individual income. The macroeconomics is not at all concentrating on the individual income, it is concentrating on the aggregates of income. We are not going to study about the source of individual who earned the income or who have a income in the market. We are going to study the aggregate of individual, what the contribution of A, what the income of A, what the income of B, what the income of C, together what the overall income generated by the citizens of the particular country. It is in terms we are going to measure, it is an aggregation of income, it is a national income only we are taken into consideration, we are not going to take a individual income into consideration. We are not going to deals with the individual prices, we are deals with the price level only determined by the market forces, price level only taken into consideration by the macroeconomics, it is not going to be deals with the individual product price. Take for example, a product price is costed around 10 rupee, 15 rupee, we are not going to take into consideration. We are going to take into consideration of a price level, what level of price the product is available in the market, what level of price the laptops are available in the market, what level of price the vehicles are available, two wheelers are available in the market, four wheelers are available in the market, what would be the overall price level in the market? Did you take a manufacturing sector, services sector or agricultural sector, it is going to determine the price level for the commodities. It is not going to study the individual prices, it is not going to be study the individual quantity, it is going to study about the aggregates, it is going to study about the overall quantity, it is going to study about the overall price level in a particular country. So, in that the particular thing we are not going to deals with the individual elements, rather we are going to deals with the aggregates of overall quantity. The quantity, what we are not going to see the individual, we are going to see the overall aggregate or overall quantity or overall output we are taken into consideration. So, these are the major parameters while we are going to measure the macroeconomics. So, the need to understand the macro environment. While you take a environment is going to play a vital role. Environment is going to play in which we are going to know about there are controllable factors or uncontrollable factors are determining the environment. Let you take organization or a government, we are going to take the environment into two major categories, internal environment and external environment. What about the internal environment? The environment which is prevailing within the organization, which we call it as internal environment. Normally what the characteristics of internal environments are controllable in nature, we can be able to control. What are the major internal environment in terms of its employees, in terms of its resources, which can be easy to control, which can be easy to monitor, which can be easy to evaluate, we can be able to identify the behavior of internal environment, internal factors, it is easy to determine, but it is very difficult to understand the external environment. While we take the government policies, we are not able to predict, while we take the political situation, we are not able to predict, while we are going to take the needs and wants of the consumer that tend to change, the social behavior, the public policy, everything that tend to change, we are not able to determine, we are not able to control over the variable. So, the uncontrollable variable, what we call it as the external environment, whereas the controllable variable are the internal environment. While you take the internal environment, we call it as a micro environment that deals majority with the microeconomics, whereas you take the macroeconomics, uncontrollable environment, uncontrollable variables in the environment, we are going to study about the macroeconomics. So, we call it as the environmental factors what we are taken into consideration while we are going to study about the macroeconomic factors, we call it as macro environment. What are the macro environment? It constitutes those outside forces that are all not under the control of the firm, but have a powerful impact on the firm's functioning. There is a implementation of GST that control over the functions of a firm, how much they need to pay in terms of goods and services what they have been produced in a particular organization. Likewise, there are different policies are having a major impact on this. So, likewise it is not going to be controlled by a particular person or organization does not have any control over the variable, which we call it as an uncontrollable variable, that is only being studied under the macroeconomics or macro environment we are going to study this. It consists of individuals, group of organizations, agencies and others which are deals with the course of its business, that we are going to study in the macroeconomics. Macro environments we are going to see. In that the environment, in that the prevailing environment, in that the marketplace, what would be the behavior of individual or a group of individual, or let you take as households, or you take the organizations, you take agencies who represents on behalf of others and the other people and which the firm is dealing during the course of its business. What are the problems that they are facing, what are the hurdles that they are facing, what are the opportunities are available for a firm in the outside market, we are going to study under the macro environment. What are those important macro environment we need to study in this particular time? Macro environment, let you first understand the concept of economic environment. In the economic environment, we are going to study the economic environment is uncontrollable in nature, that will be decided, that will be the overall aggregation of goods and services produced in a particular country. that is going to be the general employment happen in the particular country, employment opportunities in the country, eradication of poverty, unemployment situation, downsizing the unemployments. So, the reason in which we are going to understand, the reason we are going to evaluate the economic environment, it is uncontrollable in nature. While you take the socio-cultural and demographic environment, that you take the socio-cultural or demographic environment, it is about the behavior of the people who are living in a particular country. It is in terms of the demographic situation, their socio-economic situation, their buying behavior, their sources of income, their attitude towards making investments. There are different parameters we are going to study under the category of socio-economic behavior, or like it is a demographic factors, it's a technological factors. The technological factors are also driven factor. What about the technology advancement in a particular country? What about the technology acceptance in the particular country? The level of acceptance, adoption, innovations happens in a particular country. In that, the environment we call it as the technological environment. How I can able to minimize the work, or how I can able to get maximum attention from the customer in terms of my technology, that uncontrollable variable. The ecology and physical environment prevailing in the particular country, prevailing in the particular organization, about in terms of their manufacturing capacity, in terms of their machinery what they are using to manufacture the goods, everything that comes under the category of this ecology or physical environment and physical environment. Political and legal environment, what the policy, the government has taken a policy. You take a political situation, what it is prevailing. If it is a stable situation, the functioning of organizations are smooth, it is going on well in our market. Let you take, it is an unstable situation which is happen in the market, which is in terms of political instability, it is going to affect the functioning of overall organization in the market. It is like a legal environment. Let you take the policies for starting up of the business. It is in terms of the formalities. It is in terms of formalities for getting a license, renewal of license. It is in terms of labor related policies, labor legislations in a particular country, everything that going to affect the environment. So, let me sum up these factors. The economic environment that deals with the different policies are formulated by the government. For example, you take a fiscal policy, monetary policy, human resources policy, you take into consideration while formulating that you are not having a authority to control over the policies, rather you are going to following that. Rather you take the social cultural, it is a behavior of the people, taste and preference of the people that tend to change over the period of time. We need to understand accordingly, we need to act, we are not having a control over the variable. Technological environment, what type of technology is prevailing in the market, what type of advancement we need to introduce in the market, what type of innovations that might be happen, is there any inventions happen during that particular period of time. We are going to adopt the situation, we are not having a control over the variables. Let me take the ecology or the physical environment, the current situation, the current environmental aspect, what it is going on in the market. It is like if everyone is moving towards the green environment, we are also moving towards that, we are not going to deviate from that. That the particular thing that comes under forcing the people to take or forcing the people to adopt the situation, what it is prevailing in the market. Let you take the political and legal environment, what is the kind of political situation is going on, what about the legal environment. It is in terms the government introducing a new policy, introducing a kind of subsidy facility, introducing a kind of a transfer of payments. It is in terms of a policy what formulated by the government related to the welfare of the society. It is in terms I am going to analyze the legal procedures. It is related to the legislation, labor legislation. It is in terms of regulation of a market activities. So, everything that together comes under the category which is going to determine the macro environment. Next, we need to understand the difference between the microeconomics and the macroeconomics. So, what the difference between the microeconomic and macroeconomic? Hope you all already aware the difference, the basic difference between the microeconomic and macroeconomic. Microeconomic is going to study about the individual element, rather the macroeconomic is going to study the overall conditions. In that the definition itself you understand the meaning of micro and macro. Microeconomic is only deals with the individual output, individual production, individual income, individual price of the product, whereas the macroeconomics is going to study about the price level, is going to study about the aggregates of output, is going to study about the overall performance. So, in that the particular perspective you need to understand in further what are the basic difference between the microeconomics and macroeconomics. So, in this definition in this classification I just made the three important three important things. First one is related to the basis of comparison. In what basis I just make the comparison of the difference between the microeconomics as well as for the macroeconomics. So, with that the particular aspect, let me take the first one, the meaning. So, what is the meaning for microeconomics and macroeconomics? The meaning for the microeconomics, the branch of economics that studies the behavior of an individual consumer, firm, family is known as microeconomics. So, studying the individual elements, studying the household, that comes under the category of microeconomics, whereas the macroeconomics, the branch of economics that study the behavior of whole economy. It is the national economy, it is the international economy what we are going to study, the overall aggregation we call it as macroeconomics. Second comparison that deals with what it is deals with, where it is deals with, where you take microeconomics, the microeconomics deals with the individual economic variable, individual price level, individual output, individual income only deals into the consideration, whereas the macroeconomic that deals with the aggregate of economic variables, for example aggregate of demand, aggregate of supply, aggregate of output, aggregate of price level, it is going to be deals with the overall factors. Third comparison in terms of business application, it is applied to the operational or internal issues. So, in that the environment itself you understand, we divide the environment into two major categories, internal environment and external environment. Internal environment are controllable in nature, whereas the external environment is uncontrollable in nature. The same that the microeconomic is going to deals with the operational or internal issues, in terms of issues are related to the operations, in terms the more number of wastages in a particular organization. We need to find out the solution, what the reason there is a kind of wastages is going to happen in the particular organization. We need to understand the effective utilization of machineries in the organization, effective utilization of manpower in the organization. Likewise, a kind of operational issues we are going to deals with that. We are going to deals with the individual elements, internal environment, we are going to deals with the labor policy of the particular organization. We need to deals with the usage of effective usage of labor, we need to deals with the effective usage of money in the particular organization. Likewise, what we are going to deals with the individual resources, internal resources of a particular organization. So, that comes under the category of microeconomics. While you take the macroeconomics, environment and external issues, it is going to study the external environment, macro level environment and the external affairs, it is going to deals with that. It is going to deals with the impact of political situation, impact of legal situation, impact of social and economic changes. It is in terms we are going to study about the technological aspect. So, likewise we are going to study the external environment. Next basis of comparison in terms of scope, it is you take the microeconomics covers the various issues like demand, supply, product pricing, factor pricing, production, consumption, economic welfares. In that you take the covers the various issues like the demand, individual demand for the product, individual demand for the organization, only we are studying under the microeconomics. We are going to study about the supply in terms of a product, what will be the ability of an organization to produce the product in a product to meet out the demand, we are going to study in the supply. The product pricing, what price I am going to sell the product in the market in terms of its cost, or the prevailing market price, or a premium price I am going to sell the product, or a economic price I am going to sell the product in the market, or a skimming price, or a penetration price. Likewise, I am going to decide the price of the product in the market. In which price the product should be available in the market is to be determined by the marketer, by the firm in the market. So that we are going to decide, we are going to understand and study in the product pricing. Factor pricing. What are the factor pricing? We need to understand, we need to identify the factors what we are using for production, land, labor, capital and organization. What would be the price, what would be the interest I am going to give, what would be the salary or wages I am going to give, what would be the amount of interest I am going to pay for the borrowed capital, what would be the profit I need to pay to the management under the business entity concept. Business is differ from its ownership. So, what would be the the contribution in terms of profit I am going to give it to my owner. So, likewise I am going to study, this is what the scope in which the microeconomics is operating, and the factors like the consumption, the individual consumption, and it is the economic welfare of the people, providing some additional facilities, benefits that deals with the micro level. Whereas you take macroeconomic, that covers the various issues like national income, general price level, distribution, employment and money. It is going to deals with the various aspects. For example, you take a national income, it is in term we are going to measure the aggregation of overall income generated in a particular country. It is about the general price level in which the products are available. It is we are going to measure if the flow of money and compared to the price level, we are going to measure, we are going to evaluate and determine the inflation rate prevailing in a particular country, which is going to be the indicator, which is going to measure the flow of money or flow of fund in a particular economy, that we can be easy to evaluate, and the distribution and the employment opportunities prevailing in a particular country, and what would be the generation of income, what would be the flow of money in the different sectors of economy. Let you take the flow of money from the individual or from the household to the firm, firm to the household, firm to the government, government to the firm, government to the individual or a government to the household, the firm that deals with the foreign sector or a foreign country or a foreign companies that deals with the firms which are all residing in India. So, likewise what is the movement of cash, movement of money, that is going to be evaluated, that is going to be measured in macroeconomics. And the next parameter we are going to make the difference in terms of limitation. It is based on the unrealistic assumption, that is in microeconomics it is assumed that there is a full employment in the society, which is not at all possible. We are not assuming that you take the entire population is not being employed. There are a population is not employed. You take for example of earlier ages or children who have not been employed, we have taken those numbers, those values are also into consideration. It is not possible for the full employment in the particular country, it is not at all possible. So, that the microeconomic it deals with the full employment, whereas the macroeconomics is analyzing that sometimes the aggregation of concept is sometimes may not be a true individual unit and vice versa. So, what we are taking the entire income generated by the people, overall aggregation of income, aggregation of expenses, total value of demand, total value of supply, we are taking the entire aggregation. Sometime it may not be the true. The case the individual income are differ, individual demand is differ, supply of product is differ by the different organization, price is differ for the different product in a different market condition. So, we are not able to go for the concept of aggregation, sometime it make a trouble while we are going for the aggregation concept for measuring the macroeconomics or the overall economics. The need to study the macroeconomics, what is the reason or what is the purpose we need to study about the macroeconomics. Let you understand this particular concept of macroeconomics in different perspective, we are going to study the macroeconomics in terms of individual perspective, in terms of household, in terms of government, in terms of we are going to study in the perspective of the firms. In terms, we are going to study about the perspective of the foreign sectors or foreign company contributions. Likewise, in different sectors, in different needs, we need to study about the macroeconomics. Let first we take from the view of point of consumers, firms and government. These three sectors are taken into consideration. Point of view of these three sectors are collectively together is trying to understanding the macroeconomics, understanding the need of macroeconomics. The macroeconomics tries to anticipate the economic conditions to be able to help the consumers, firms as well as the government in terms of their decisions. Let you take one particular example of this, how the macroeconomics is helping. It is in terms of what salary that the individuals are receiving, how much they are spending for buying the product from the firm. With that, what would be the revenue generated by the firm? With that, what the firm is going to pay in terms of taxes to the government. So, how the government is going to take the decision. So, collectively what the aggregation concept is going to help for the firm, help for the household, help for the government are going to be benefited by the study of macroeconomics. From the point of view of economics performance of the economy viewpoint we have taken, a study of macroeconomics helps us to evaluate the success or failure of the economic policies of the government and the central bank of the country. It is in term we are going to measure or identify the performance of economy in terms of we are going to understand the GDP rate. If the GDP is going to be the performance of a country, how we are going to measure or how we are going to evaluate. So, that the particular thing, the GDP is going to be the situation in which we are going to understand, we are going to evaluate the performance of a country. We are going to measure the performance of the country in terms of government policies, economic policies, in terms of the policies of the government, like a fiscal policy, or like you take for example of monetary policy, you take example of the credit policy, what would be the prevailing rate of return, what would be the facilities are provided by the government, what would be the rate that the government is suggesting that the banks should follow the rate like the cash reserve ratio, statutory liquidity ratio and the repo rate, reverse repo rate, marginal standing facilities, bank rate. Likewise, they tend to change. These are the measures in which I am going to be able to measure the performance of the country, performance of the economy in the particular country. Third important parameter, we need to understand the need of macroeconomics in point of view of economic stability and growth, sustainability as well as the development of economy. Although the macroeconomics involves wide field of study, stability and the growth of major areas to determine the consistency of growth of an economy. The growth in terms of a sectoral wise, in terms of a growth of agricultural sector, growth of industrial sector, growth of a services sector, how collectively this growth is going to contribute to the growth of economy, we are going to study under this. So, the need to study about the macroeconomics. First, you need to understand what is circular flow. The circular flow is a movement. We are going to measure the movement of money, we are going to measure the movement of goods and services. So, in that the particular thing, we are going to divide the circular flow into two major categories. The first one, real flow. What is real flow? Is a flow of factors of production. What are the factors of production? Is a land, labor, capital and entrepreneurial ability. So, that we call it as the factors of production, as well as the flow of goods and services from the different sectors. So, what are the different sectors? We normally divide the economy into various sectors, 2 sector economy, 3 sector economy and 4 sector economy. What is in 2 sector economy? 2 sector economy consists of households as well as firms, that the 2 sectors included in the economy, which means we are not taken the rest of sector into calculation while calculating the income and expenses. We will calculate only the flow of goods and services within the firms as well as the household only taken into consideration. Well, we take the 3 sector economy, we will take the household, we will take the firms, we will take the government is also into consideration, For the government is also manufacturing, the government is also offering the goods and services, government is also transferring the payments, providing subsidies, and the government is also collecting taxes, so that the flow also calculated in the 3 sector economy. While we take the 4 sector economy, the 4 sector economy we also included together this household, firm as well as government, along with we include the rest of the world, which means the foreign sector, the export and import activities of the nation is also taken into the calculation of flow. So, with this we just divide the real flow is based on the movement of goods and services, is a movement of factors of production from different sectors of economy also taken for the calculation of flow. Then second one is a money flow. The movement of goods and services will not taken into consideration, only the monetary terms, the money value only considered within the different sectors of economy. So, we are not calculating how much goods transferred or how much goods purchased, we are not taking those quantity into consideration, we just have taken only the number of or a quantity or in terms of value, the value, money value only considered for the measurement of money flow. So, the circular flow, which include the real flow as well as money flow, both the thing has been calculated. So, the circular flow of income and expenditure, you need to understand the determinants. What are the determinants of circular flow of income and expenditure, including household, firm, financial institutions, government and foreign sector are those major determinants of economy, major determinants of circular flow of income and expenditure. So, the first one, household. So, in that the household, what the household is normally doing, in the household individuals or a group of individuals, they are residing as a family together, what they are purchasing. So, how much they are purchasing, how much they are spent, the purchase of goods and services, what they are purchasing, and what the income of the household in terms of offering the payment, in terms of payment received for rendering the factor service, in terms of offering the factoring services. While we take the second sector, firm, in that the firm that are all doing the business, for the business they are selling of goods and services, the flow of goods and services to the household as well as to the government, they are selling the goods and services, they will receive the income out of that, and they are also making payment for utilizing the services from the household. So, that is a work of the firms, as well as the firms are also making payment in terms of the taxes to the government, that they are making payment, and the role of financial institutions, including the role of financial institution, what they are collecting or they are receiving the deposits and they are offering a kind of loans, or they are providing investments to the industries. So, that the role of financial institution is also very important for measuring the flow of income and expenses. And the role of government, the government is also manufacturing, government is also offering the goods and services, government is also accepting the tax from the household, the government is accepting the tax from the firms, the government is also providing subsidies for the development of industries, for the consumers also the subsidies are provided, for the lower income category, middle income category, there are a kind of schemes amended by the government, for that the government is providing some sort of funds, the welfare facilities offered by the governments are providing some sort of transfer payments. So, those categories the government is also an important to measure the circular flow of income and expenses, and the foreign sector or the rest of the world. So, the import and export activity between the various sector which involved in the foreign sector. So, that also we will calculate in the circular flow of income and expenditure. So, what we consider these 5 major category, or we call it as a 5 major elements which are all included while we are measuring the income and expenditure within the economy. And the circular flow of income, we divide the circular flow of income into the 3 major category. First one, the circular flow of income from 2 sector economy. The two sector economy will classified as household and firms, household and firms. And the circular flow of income calculated on three sector economy, household, firms and the government sector. The government sector is included here. Here for the next one, circular flow of income in a four sector economy, household, firm, the government and the foreign sector for export and import activities. We will measure, we will calculate for this. So, for the let me take the first one, households and the firms, between the activities of household and the firm, that included in terms of real flow as well as money flow is measured here. And we take the three sector economy. For the three sector economy, household, firms and the government sector is also included here. The government is also play a role for offering the benefits to the individual, to the household, to the firms, so that the benefits and the collection of payment from the household as well as from the firm in terms of tax that they are receiving. So, that will be calculated in this, and the circular flow of income and expenditure from the four sector economy that will calculate addition to the government sector will include the foreign sector into calculation. It means the import and export taken for the calculation. So, whatever the flow of money will be measured in terms of inflow, the flow of money will be calculated in terms of outflow. So, the inflow and outflow will be calculated by using foreign sector in this. So, these are the three sector economy, and the first one, circular flow of income from the two sector economy. So, in this two sector, households and firms only involving with this. So, in this what you need to understand, the national income under this two sector economy is calculated, the national income is equal to consumption. So, whatever the income generated from this two sector, income is equal to consumption or income is equal to expenses. So, this is what the assumption has been taken in this two sector economy. So, let me take the first one, household, and what would be the relationship between the households and firms. So, the first one, you take the households are purchasing the goods and services. So, the purchase of goods and services, that what the household spend for expenditure on goods and services, that they are going to purchase it from the firms. For the firm, what they are doing, the flow of goods and services, they are transferring the goods and services from the firms to household. This is what the first one. Here you take the real flow and money flow. So, what is the real flow? The real flow is the flow of goods and services. What is here is money flow? The expenditure on goods and services. So, the money flow and the real flow will calculate, and we take the relationship between the firms and household, what type of relationship that they have. The firms are getting factor services from the household. So, the households are providing the factor services to the firms, the factor services provided. What is factor services? The factor services are the factors of production. What are the factors of production? Land, labor, capital and entrepreneurial ability. So, that normally what we consider, the households are own these factors. So, these factors are to be rendered by the household to the firms. So, the household have land. So, the land given to the firms. So, it is a first factor service. So, next you take labor, what the household is working as an employee in the organization, and capital provided by the firm, by the household to the firm, and entrepreneurial ability is given, the support, the entrepreneurial support given by the households to the firm. So, these are the things what we normally consider as the factor service rendered by the households to the firm. So, this what we consider as a real flow, we consider as a real flow. Where is the money flow? Why? Because in this the flow of income and expenses, every real flow will have a money flow. So, here real flow is a offering of factor services by the household to the firms. For that, what firms are doing? Firms are accepting the factor services. What are the factor services? Providing land, getting labor, getting capital, and getting entrepreneurial ability of the household, that is utilized by the firms. For that, the firms are offering, the firms are giving the factor income. What are the factor income given by the firms? In terms of using land, they are giving rent. In terms of using labor, they are giving wages or they are giving salary. In terms of using capital given by the household, they are giving an interest. In terms of using the entrepreneurial ability of the household, they are giving a profit. So, these are the money flow in terms of factor income what we are receiving. So, in this the circular flow of income of the two sector economy, there are two factors or two sectors, household and the firms. The household, what normally they are providing factor service, they are purchasing goods and services. There is one money flow and one real flow, and here for firms, firms are accepting factor services, the firms are transferring the goods, which means the firms are making payment for the factor services rendered by the household. One thing is a money flow. Then second one, whatever the goods and services purchased by the household, those goods and services transferred from the firms to the household, we call it as a real flow. So, this is a two sector economy. In this two sector economy, need to understand about the concept called withdrawals and injections. While we take the first assumption, what we have, S is equal to Y minus C, which means savings is equal to income minus consumption. But what normally we have a assumption? We have a assumption entire income is equal to the expenses, which means entire income is equal to the consumption. But what the changes here, you need to understand the changes. Every amount, whatever the amount received by the household, the entire amount will not be spent for the purpose. So, what we have some leakages, we have some withdrawals also happens in the economy. So, how those withdrawals and how those injections are to be measured? Withdrawals what we consider as a outflow. So, in this equation you need to understand the savings. How we identify the savings? Income minus consumption. It means income minus expenses. Whatever the income you have received, say for example, you have received 20,000 rupee and you have spent for 15,000 rupee, remaining 5,000 what we consider as a savings. It means for the future consumption, you are storing for future consumption. So, that will calculate in this. We need to understand better for knowing the concept of withdrawals and savings, withdrawals and injections. So, here withdrawal as an outflow of fund, it is out from the economy, out from the sector, and what is injection? Is an inflow, injections as a inflow. Okay. So, that the injections and withdrawals is not only applicable for the households, it is also applicable for the firms, it is also applicable for the governments, it is also applicable for the foreign sector also. It is not only for the two sector, rest of the sectors also this injections and the withdrawals applicable for this. So, the withdrawals are like a kind of outflow of funds and the injections are the inflow of funds in this. So, keep this concept, will explain in further, and you need to understand the circular flow of income in three sector economy. So, the circular flow of income in three sector economy, there are three important sectors included. First one household, second one firms, third one government sector. So, here in this you need to understand the role of capital market. What is the role of capital market or a financial institution or a bank you take? they are collecting deposits, and those deposits are going to be given in the form of loans, or they are going to make investments into the business, other business or core business activity or other related business activity, they are going to make investment. So, that you need to understand here, the rest of the flows are common. What is the rest of the flows are common? The household, that they are purchasing the goods and services, that is what the expenditure on goods and services, whatever the money spent. So, you are aware the expenditure on goods and services is a money flow, and for that the firms are transferring the goods and services, the flow of goods and services, real flow, and the household renders the factor services is a real flow. For the whatever the factor services received from the household, the firms are making payment, what we call it as a factor payment, the factor income received by the household in terms of monetary flow. So, this remains constant, but here you need to understand the role of government. What is the role of government in this? The role of government here, for making, the government is also manufacturing, the government is also offering the goods and services, that the goods and services is also going to be purchased by the households, also purchased by the firms. In addition to this, the government is also collecting taxes from the household as well as from the firms. For that, the government is also providing a number of facilities to the firms, facilities to the households. What are those? For that, you need to understand, firms are paying taxes to the government, money flow. Individuals or the households, the families are also paying tax to the government, what we call it as a money flow. And what government is doing? The government is expenditure on the services and transfer payments, which means whatever the service utilized from the household. Why? Because that the household is also providing a service. Here you need to understand the factor service what provided by the households to the government. For accepting factor service, the government is providing the factor income or factor payment to the household, factor payment to the household. So, that we consider as a expenditure on services. We will take here service from the utilized from the household and making some transfer payments, offering some sort of subsidy, kind of welfare facilities what offered by the government to the households, in terms of even we are purchasing LPG, will get some subsidy, we are going for public distribution system, ration shop we are getting a product in a subsidized rate. So, for that what the government is providing a kind of welfare facility to the household. So, that what consider as a kind of expenses to the government, we also consider as a money flow. Here it is transferred from the government to the household, and we take the firms and the government. Here the firms and the government, the firms are paying taxes, so that received by the government. For that the government is also making expenses on the goods and subsidies provided to the firms. In terms, the firms also offering the service and the firms will receive a payment. For example, majority of the government organizations, the kind of work is being executed by the other organizations, and the government using some sort of services from the firms, for that they are making payments. The government is providing a kind of subsidies to the firms in terms of starting up the enterprises, even for running the enterprises, quality improvement. There are a number of schemes floated by the government. For that the different benefits, even interest subsidy or a kind of capital subsidy, the different sorts in which the government can help the enterprises for its growth. So, that the kind of services being provided from the government to the firms included in the 3-sector economy. The next one, circular flow of income in 4-sector economy. In that the 4-sector economy, we also included the foreign sector. In that the foreign sector, we have the exports and import also taken here. but the rest of the things are common. You take for example of the household making purchase of goods and services, flow of goods and services from the firms to the household, and the kind of the factor services and factor income, and the government taxes and transfer payment here for the firms collecting taxes and providing sort of subsidies are provided. But what is the role of foreign sector? The role of foreign sector with the rest of the economy, which means the firms are making payment for imports, which means the foreign sector makes the real flow transferring of goods and services to the firms, and the firms are receiving payments of export, which means the goods and services what exported are transferred from the firms to the foreign sector. So, that will take here for the fourth sector economy. Okay. And here you need to understand the role of the capital market. It means for banks and financial institutions, where the banks and financial institutions, that the savings what collected from the households, that is going to be transferred by the capital market for further mobilization in terms of offering investments or in terms of offering loans that provided by the households. That is what here the savings are converted into the investment. And here you need to understand the concept, the leakages and injections. Here for leakages and injections, what is the leakages, and you need to understand what is injections. The leakages are withdrawals. What are the withdrawals here? Here the withdrawals from the economy, from the different sectors of economy, we can take the savings. What is savings? How we will calculate the savings? Savings, we calculated the savings is equal to y minus c. It means the income minus consumption, expenditure on consumption. Remaining portion or a residual portion, what we call it as savings. So, that the residual portion of the thing we call it as a savings. What the first assumption in the two sector economy, whatever the entire income is equal to expenses, but here the entire income is not spent for expenses, not spent towards the consumption. So, that is a problem here. So, what happens to the remaining amount? Will kept in the form of savings. So, where we kept in the form of savings? So, what we are doing, we are normally doing that the money we consider as withdrawal, which we consider as outflow of fund, outflow of money, which means which is away from the sector, that particular money is away from the sector. So, that we call it as a savings. So, normally with the 3 sector and 4 sector economy, you understand the savings are away from the sector, which is kept away from the sector, kept away from the household, and that will be stored, that will be deposited into the capital market, or that will be invested into the capital market. So, that the savings is a outflow, or what we call it as a leakages is a withdrawals. It means the outflow of fund, outflow of money from the sector. And the taxes. So, here what you need to understand, the first assumption, we have income is equal to the consumption. If I have received 20,000 rupee, the 20,000 rupee I am going to spend, no problem. Here there is no injections, there is no withdrawals. The entire money what we have received has been spent, not an issue. But I have received 20,000 rupee, I have spent 15,000 rupee for consumption. So, there is a problem here, it is arising. So, what happens remaining 5,000 rupee? The 5,000 rupee is outflow of fund. It means the withdrawals. We are withdrawing from the consumption. We are going to store it for future consumption. We are going to store it for making deposit into the banks, deposits into the post office, or making investment into the market. It is turned into the market. So, that what we consider as a withdrawals, and let you take the taxes, whatever the source of income, especially you take for the firms as well as for the household, whatever the income they are receiving, the income is not equal to consumption. So, you understand the income y is equal to C plus S, which means the consumption plus savings. So, the consumption plus savings, and you need to understand whatever the total income you need to pay the taxes. If it is exceeding the limit prescribed by the government, you need to pay the taxes. So, how much I need to pay the taxes? So, that also problem we need to understand. It is also, the taxes is also considered as a leakages, the taxes is also considered as a outflow of money, the taxes are the withdrawals. So, in this particular one we need to understand the taxes is a outflow, it is flow from one sector to other sector, which means from the firm to the government, with the household to the government, they are paying tax, the taxes are collected by the government. So, we will call it as a leakages, which is away from the economy, we will consider as. And the next one is import. What the goods and services, if it is not available in domestically, it is not available or scarcely available, we are going for the activity of importing of goods and services. For a technological machinery we are importing. So, for that what we need to pay. So, the money flow is away from our economy, the flow of money is away from our economy, away from the economy. So, which also we consider as a import, also consider as a outflow, import also consider as a leakages. When the there is no leakages, it means there is no flow of fund away from the economy. If the flow of fund is away from the economy, we will consider as a leakages, we will consider as a withdrawals, or it is a kind of outflow of money from the sector. So, these three, savings, taxes and imports, we consider as leakages. And there is a leakage, in opposite to that we have injections. Why? Because we are not going to spend, we are not going to transfer that money, whatever the money we have transferred from one sector to other sector will have other benefits, will have additional benefits, will have additional source for that, the kind of leakages. Injections, we call it as a injections. Injections are the inflow of funds, injections are the inflow of funds. So, what are those inflow of funds, what are the benefits of those inflow of funds? You need to understand. The first one is a investment, is a inflow of funds. So, whatever you have saved, whatever the money you have not spent from your income, unspent portion of income kept in the form of savings, that is deposited into the capital market, and the capital market will receive those deposits, and again those deposits or savings are infused in the form of investment into the market. So, that will be received by the other sector, what we call it as a firms. Firms are receiving the investments collectively from the households. So, the different households are making deposits. So, those deposits or those investments are to be realized, different forms of income are to be realized by the household in terms of loan or in terms of different the contribution of capital that will be received. So, that will be again infused into the economy, again injected into the economy, what we call it as injections. So, the injection, the first one injection, the first one inflow of cash, inflow of money, we call it as investment. The second one, government spending. What is government spending? Why the government spending is become a injection? Because what we have, what received by the government in the form of taxes. So, those taxes are not only kept by the government as it is, whatever the tax received from the household as well as from the firms are to be utilized for different purpose. What the purpose received by the government? Government are using the services from the household, which means the factoring services received from the household. For that, the factor payment, transfer payment are given by the government to the household. It is also again injected into the economy. Then second one, whatever the taxes received from the firms, the government is also extending the service, providing the welfare facilities. The government is also getting or using receiving goods and services or purchasing goods and services from the firms, as well as the government is also providing a kind of subsidy to the firms in terms of starting up of the enterprises or running the enterprises or for improving the quality of an enterprises. For better marketing of enterprises, there are different schemes. For example, you take MSME, micro, small and medium enterprises, there are different schemes are floated by the ministry, as well as there are different organizations, they are also floating a different schemes. So with that the scheme you can be able to start your business. For the starting up of the business, the government is providing subsidy, including a moratorium period, including a kind of interest holiday, including capital subsidy. The different benefits are to be provided by the government to the firms. Okay. So that what we call it as government spending. Government spending is also again infused into the economy. We call it as injections. Injections are the inflow of money. The last one, the imports what we have received in the form of leakages. In corresponding to the imports, what we have exports. What is export? That the goods and services are away from the country. Will sell the goods and services out of the country, will receive the income from the rest of the world. Will receive the income from the rest of the world. So the income what we have generated from the rest of the world has infused into the economy. So this we call it as the exports. So exports is not normally considered that whenever we are considering the developing country or developed country, the developed countries are having a major portion of export. So the enormous kind of incomes are to be generated in this the activity of export, so that the benefits are also transferred. So this export what we consider as the inflow of funds, the funds are injected into the economy. So these are the leakages and injections. Once again, the leakages are what we consider as outflow of funds. That outflow of fund is not entirely is going to be as idle one. The outflow of fund again comes in the form of injections, again comes in the form of inflow of funds with a different effect in an economy. Okay. So these are the major things in this circular flow of income and expenditure. So with this I would like to just summarize the information in the circular flow of income and expenses. The circular flow of income and expenses what I have completed in this session. The first one, the circular flow will be calculated on or measuring with the two important parameter. One is real flow and money flow. The real flow is a flow of goods and services, the flow of factors services, the factors of production, that we will consider as the real flow. The money flow will calculated on the monetary flow with the different sectors of economy, one thing. Second one is about the determinants of the circular flow of income and expenses. The major determinants of income and expenditure are the factors influencing for income and expenses of an economy is household, firms, government, financial institutions, foreign sector are the major category we have in the form of determining the flow of funds from the different sectors. And the circular flow of income and expenses classified into three major categories: 2 sector economy, 3 sector economy and 4 sector economy. In the 2 sector economy, only 2 sectors, the households and firms taken into the consideration while calculating the economy, while we take the 3 sector economy along with the household firms, we also take the government into consideration. The 4 sector economy along with households, along with firms, along with government, we also take the foreign sector into consideration. So you understand about the flow of goods and services, the flow of money flow from the households and firm, from the households to the government, the firms to the government, and the government to the firms, government to the households. And the foreign sector export and import activities with the firms we take in the 4 sector economy. That the 4 sector economy inflow and outflow will calculate on that the basis. So, the import and export we have, and with that the overall calculation, the overall measurement of money flow and overall measurement of real flow, you need to understand the withdrawals and injections, leakages or withdrawals. What we consider as a leakages or withdrawals are away from the economy. What is the injections are injected or reinforced into the economy for the further development. So, these are the categories you need to understand. This is what the way we will measure the income of a nation. Thank you.